Hello, everybody. Welcome to the Fundamental Analysis webinar this afternoon. My name is Troy. I'll be presenting today. As we get going, let's do a quick systems check. If you would, type OK in the chat box if you're hearing me clearly and seeing my screen all right. Peter, yes, the content will be available, I would say, by morning time or early afternoon time Monday. All of my webinars are recorded and uploaded usually by the next business day, sometimes same day. Certainly on Friday, it won't be until Monday. And you can view the recordings on our YouTube channel, okay? And the strategies, you're welcome, Peter. The strategies still apply, even if the exact entry points don't, for what we cover. All right, looks like we're up and running fine. I have enough OKs. Thank you for the responses. Looks like we have a nice crowd today, for a Friday anyways. And let's take a look then at some fundamental news and then do the technical analysis to find potential entry points. As we get going, keep in mind all investments have risk. The same is true with Forex trading, spread betting, CFDs, options trading, etc. No one trade is guaranteed to bring you profits. I think we all understand that. But we also understand that each trade does bring with it the potential for profits, which is why we're all here. And we'll go over some educational material, not meant to be financial advisement, that hopefully will help you in your decision making and your strategy concepts to improve upon your P&L at the end of the month each month. Julius, yeah, okay, maybe we could have some background music before starting the webinar. Good suggestion. I don't know if we'll carry that out, but that's not a bad idea. Okay, so if you want to read the full risk disclosure statement, it's found on AvaTrade's main website. And also keep in mind, and we'll take a look as long as we're mentioning risk, there's a nice feature on our AvaGo app that allows you to protect trades against losses for defined time periods. This feature is called Ava Protect. And so maybe we'll take a quick look at where you find that on our website as well. Right now we have protected trades for gold, silver, most all FX pairings as well. So it's not a bad way to go. Sometimes in lieu of maybe putting a stop loss, you put the protection for a defined time period first, and it can work out maybe better that way many times. So as we get going, we should probably mention what is fundamental analysis. There are probably some newbies in the webinar. So fundamental analysis is looking at the news stories, the big breaking topics and headlines that are coming out to understand, which way is the wind blowing, so to speak, with the markets. And some of these fundamental news tidbits are scheduled announcements, which we refer to as regular economic events, something like GDP numbers, factory production numbers, etc., that come out at scheduled days and times on a regular interval type basis that we can plan for when those announcements will be, what the topic will be, and what currency pairing or asset it might likely affect. Then the other type of fundamental news is more what we call extraordinary economic news. And we've been dealing with a lot of that lately. And it's really been controlling the markets more than the scheduled economic announcements. Who cares about PPI numbers if there's a global pandemic, right? And we already know why the PPI numbers are bad, why the retail numbers are bad, etc. So the big excitement isn't necessarily from watching those economic numbers come in, that many times does generate a lot of excitement. I think the bigger excitement has been from the extraordinary fundamental news with this global pandemic. Now, with that said, we will take a look at some of the regularly scheduled economic numbers that came in today, and you'll see it was quite predictable what those numbers would likely be. And so no big headlines about how bad the numbers were because we all expected it, but certainly some headlines about what's going on with the global pandemic that's been going on. So let's move forward. Let's take a look at some fundamental news, and we'll get on my demo account. We'll take a look at some of the live movements that you might be interested in trading on. Now, if you're interested in using the AvaGo mobile app, it's found here, trading platforms, AvaTrade Go. There's been some upgrades that have been worked on the past few days. If anyone's been experiencing technical issues with logging into the AvaTrade Go mobile app or any issues at all, use the MT4 mobile app that's been around a long time. And you can find the MetaTrader 4 mobile app. I'll just show you real quick right here. You click MetaTrader 4 platform. That's the PC version of the MetaTrader 4. This is for Apple products, Android products, for the MetaTrader 4 mobile app. So have that as a backup, okay? In case you have any connectivity issues with the AvaTrade Go mobile app. And the AvaTrade Go mobile app is very nice. It has great features. Just temporarily, the last few days, there have been some connectivity issues with it. But beyond that, it looks like this when you log into it. You can download it. Same thing, we have links for the AvaTrade Go mobile app. They both will access the same accounts, the MT4 accounts. It's like an interface over top of the MT4. What's nice about the AvaTrade Go mobile app is that it calculates your exposures for you, your margin requirement. As you're setting up the trade in the order window, if you put a trade size, it tells you how much margin is required. If you put a take profit or a stop loss, it calculates for you based on the trade size and the distance to your take profit and stop loss, what amount you'll make in potential profit, what amount you're potentially risking to that stop loss mark. Okay, so it does those things for you. You don't have to calculate the exposures and such. And then here's the Ava Protect feature. Many of the assets, FX, gold, silver, you'll see this as well. And if you check the Ava Protect box, then you can pick the length of coverage, and it shows you how much that protection costs. Type OK if you all are still hearing me. I have someone saying they can't. Okay, I have enough responses. Thank you. I'll let Mr. Liu know it's just him. Okay, so very nice features on the AvaGo app, and Ava Protect, a very unique feature for risk management that you can check out. And you know, it's a kind of a no-brainer if you can protect yourself for 1 day, 2 days, 3 days, however long the time period you pick, and the cost, if it's less than what you were willing to risk anyways, now you have unlimited protection far beyond maybe where you would have placed a stop loss with that level of risk. And you can be even more patient during that time period. And any negative, when that coverage ends, gets added to your account, and the trade keeps running. So, Andrew, if you're having any issues with your display on your iPad, that sort of thing, talk to your account manager, and we could have one of our tech guys contact you to see if they can straighten out the settings on your iPad. It could just be a settings issue on your iPad. It should be functional with the iPad. Okay, so let's go ahead. Let's take a look at some of the news. And here's the regularly scheduled economic announcements I was talking about. We see for the Great Britain pound, the announcements out of Great Britain, pretty bad. Okay, red means worse than expected. Green means better than expected. But understand, even this green number, better than expected, is really bad. You understand the expectations for these retail sales were so bad, right? Instead of improvements, usually retail sales go up, right? By 0.5%, 1%, 2%. It's always the expectation it should be a positive number usually. And now the expectation was really big negative percent drops in retail sales. And we all understand why that expectation was there. It's a really bad expectation, but it's because of economies going into quarantine, okay? Zonke, with the Ava Protect, you don't need a stop loss until the protection ends. Then you might want to put a stop loss, because once the protection's over, if it was in the negative, you get all that negative added in. If it's in the positive, your only cost was the premium. But once that protection's over, you're unprotected then. Then you want to pay attention to when that coverage is going down. Make sure maybe you get your stop loss on after that. Okay. All right. So What we're looking at then are negative numbers, worse than expected. Even the bad expectations, which were really bad, like retail sales dropping 4.7% here, they dropped even more than that. That's really bad. And same for year to year and month to month. Really bad numbers, even worse than the really bad predictions. And the one that's green, it's still really bad. Over 4% drop in core retail sales year over year. The expectation was right around there, which was a really bad expectation also. So these numbers were really bad out of Great Britain. The same news out of Germany. German numbers coming in, business expectations, current assessment, climate index, all worse than expected. Okay, so that creates bad sentiment on the pound right now and on the euro. Now, if you look up here, you see Singapore, they expected decreases and they had increases. Why is that? Maybe Singapore's ramping up, allowing businesses to open up again sooner than expected. Okay, something happened here with Singapore that maybe the Singapore dollar could be strong today, could be bullish with this information coming out. There probably were some big movements already on the charts. Okay, so this news can, in many instances, cause at least short-term movement in the direction you would expect from worse than expected news or better than expected news. Now, the bigger picture is the pandemic is still alive, right? Still happening. So the short-term excitement or negative excitement, as you might call it, positive or negative sentiment that these announcements, these scheduled announcements can have, that excitement, that positive or negative sentiment that these created don't necessarily last long term, but certainly could last through the day or even several days. Okay. Now, bigger picture items are things like this. House passes $500 billion coronavirus bill in latest relief package. So hundreds of billions more going to small businesses in the US to help pay them to pay their employees even while they're not working. That's what's happening. The US has doled out trillions of dollars now to small businesses and even some large corporations to be able to pay millions of people who aren't working. And so someone's asking, Alina, you're asking, why doesn't S&P move exactly the same as that NASDAQ? Or are you saying, how come it does move exactly the same? Let me answer that question no matter which way you're asking it. So the S&P 500, the NASDAQ, the Dow Jones have some overlapping companies that are in more than one of those indices. And in general, those indices all give an overall snapshot of the bigger economy, of the bigger movement of the economy. And so those major indices have enough companies over enough variety of industries and areas that major news like pandemics or improvement in the pandemic, new medicines that might help everyone's sentiment about the situation, being good medicines or not working out, this can move those indices, and they tend to move in the same direction. And not just US indices. When it's a global type situation and it's global sentiment that these breaking news stories are controlling, it can move European indices, Asian indices, etc. Okay, the Nikkei, the DAX, the CAC, the Dow Jones, the NASDAQ, all of them can be moving a lot of times in similar directions based on large global news. Okay, it is very common that that happens. And so now this headline is more specific to the US. You probably see more effect on the US indices with this type of news because this news is specific to an aid package for the US. But still there's overlap to other economies and other assets because what's good for the US is good for the global economy as well. Because the economies are so overlapped around the world now. It's the same with China. There's good news about China's economy. Well, the Australian dollar does well and other areas do well also. Okay, so there's a lot of overlap with assets. Yeah, globalized world. Maybe you phrased it better than me, Julius. So let's look at some other headlines. World leaders due to launch COVID-19 drugs vaccine plan. that could bring positive sentiment. You see, the markets are rising today. Why? Why are the markets rising? There's still a global pandemic. Areas are still quarantined. Well, because areas are starting to say they're going to start unquarantining. They're going to start opening the economies, and world leaders are talking about having better drugs to use for those who catch the virus so that they don't get so deathly sick. And then that allows the economy to open up even faster because you're not so worried about the spread if you can treat them and they don't need ventilators, they don't need hospital beds and such, because maybe the treatments, these drugs, simply your doctor prescribes them and you get better just like you would if you caught the flu or something else. Okay, so, and with that, mentioning the flu, they're starting to find that a larger portion of the population, and I totally expected this, we talked about this in other webinars, that a large portion of the population already caught this virus and didn't know it. That in the end, they're finding and they're starting to think that the mortality rate and the hospitalization rate with this COVID-19 virus is no different than the flu, and maybe even less. Okay, and so the fact that they're checking randomly on the street in New York and in San Francisco and finding that high percentages of people have antibodies in their blood. That was the big deal about getting the antibody tests ready. They have them ready. They're starting to use them. And they're starting to find that large percentages of the population already have antibodies, meaning they already caught it, didn't even realize it, got over it, and are immune to it. So, Scott, you're saying this has all been for nothing, meaning the quarantining. Not necessarily, because think of it this way. If, let's say, the flu, those who catch it, right, only affects let's say 0.25% of people get really sick from it and need to go to the hospital. Well, you understand with the flu, there's a vaccine, right? Most people take the vaccine, get the flu shot. And so only a small proportion of the population doesn't get the flu shot, and then they get sick. But of those who get sick, it is that small percentage. Well, for this COVID-19 virus, there was no vaccine. So even if it's a smaller or the same size percentage of those who catch it that get sick from it, let's say it's the same percentage as the flu, but it's the same percentage of a lot larger group of people because nobody got a vaccine for it, right? So, yeah, Adam, maybe that's better said. Thank you. You're saying the antibodies give resistance to a virus, and that's true in all cases because viruses can mutate, right? It makes you more resistant to the virus. The more the virus mutates, the less resistant you are, and that's why you have to get, for example, a new flu shot every year because the virus mutates, and there could be more than one strain of the virus as it mutates even at the same time. Okay, some flu shots have multiple strains in that shot all at once. So yeah, Adam, when I say immune, I mean giving some level of immunity to where it helps you from not getting so sick. And the flu shot is the same way. It doesn't give you ultimate immunity. The flu shot makes you somewhat immune to it. Sometimes you still get symptoms if you catch it, but more mild symptoms many times because you had some level of immunity from those antibodies from the vaccine. Or in this case, to COVID-19 because you already caught it, if that is the case of these people they were checking. So understand that my point about this whole discussion isn't to say I'm a doctor and I know everything about immunities and viruses, although I know quite a bit. I have a physiology background. What I'm saying is this creates positive sentiment. That's the point. Fundamental news, positive sentiment, and sentiment controls trading many times. Okay? And that's the point of this headline and the discussion about maybe people are feeling better sentiment-wise because better drugs are coming out to treat it. Studies that was just on the news, and everything I was just talking about was on the major news programs over the evening yesterday, showing that certain percentages of people have this certain level of immunity from these antibodies. Okay, and so this is the sentiment that can be out there. And as people, as investors particularly, start to believe, hey, this thing's not as serious as we thought, or hey, economies are going to start opening up. Maybe I take advantage now of opportunistic prices before the mass of people take advantage of it, right? That's how a basement is found many times with assets, or a ceiling, depending on what asset we're talking about. So positive headlines here, talking about vaccine plans, talking about drugs that will be launched that are approved to use, okay? Here's another headline: U.S. futures higher, more stimulus on the way. That's more specific to the U.S. as well. As I always like to do, a quick snapshot here on investing.com. Futures are green. We see it here. This is yesterday's market was red, but the futures, S&P, NASDAQ, are in the green, meaning positive sentiment, just like we thought from the headlines it should be. Positive sentiment, and futures are in the green. It makes sense, right? And so what about the VIX index? Why is the VIX index red? The VIX index represents fear or volatility in the market. So it makes sense. Positive sentiment in the headlines, the futures are green. So volatility and fear is down. And the VIX index is down over 3.5% right now on the day. Okay, that's quite a movement down. So there's something to the sentiment right now. So unless something new happens in the news, which could happen, right? You always have to prepare for that with your stop loss, with pending orders, whatever your system is. And I'll show you some ideas with that. You have to prepare that a breaking news story, the other type of fundamental news, right? The unexpected kind could come out and swing this momentum. Could happen at any moment. But as long as we know the momentum right now, you can try and take advantage of it until the news changes, with yourself protected in case that happens, and not just protected, but with opportunities in the opposite direction in case that happens, on the other side of support levels or resistance levels. So we see fear is down, futures are up, positive headlines. We understand what's happening. Now we go to the chart and we say, wow, what would we look for positive, potentially positive entry points? And so let's look at maybe Euro USD. Okay, the euro is spiking up right now. Okay, we see some climbing over the last 1, 2, 3, 4, 5 hours against the yen. And would it make sense that assets would be climbing against the yen, even if there were bad economic announcements, which we looked at out of the European Union? Why is the euro climbing against the yen even with bad economic news today? Remember, I said the economic announcements are giving less excitement now, and people are paying more attention to the fundamental news, global news about the pandemic, right? So the global news we looked at about the pandemic is positive sentiment. What happens to the yen when there's positive sentiment on the markets? What typically happens to the yen and why? Yes, the yen is considered a safe haven asset, good. And so the yen tends to weaken, right? And so, yeah, I know it's Euro USD chart. I had Euro JPY on a second ago. So we look at Euro JPY, which was just up there, and we see the Euro's climbing against the yen as well. Okay, you see Euro JPY. Okay, David. So Euro JPY, Euro's climbing. So not totally unexpected that that could happen. Let's look at some other pairings, maybe Canadian JPY. That'll be interesting because the Canadian dollar is negatively affected because of the drop of oil that occurred so much in the past weeks, right? Weeks and months. Because Canada, fundamentally, if we think about the fundamental situation, then the main or the largest GDP contributor for Canada, or one of the largest, is crude oil, exporting crude, right, to largely to the U.S. And so, all right, Peter, it's okay if you've got to leave early. You can, like you said, you can watch the rest on Monday on the recording. So Canada is largely affected by crude oil prices because that's a large commodity that affects their GDP. And so when crude prices are dropping, the Canadian tends to weaken. And when crude prices are going up, it tends to strengthen. Okay, so let's take a look at the Canadian against the yen. The yen in general should be weaker today, and the Canadian oil prices have recovered a little, so maybe it could gain against the yen today. Okay, and we see it's above the most recent support level down here. So this was resistance, resistance became support, 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 and up. Okay, so if you've been trading up through the day today, off of this support level, even after the breakthrough candle, okay, we look, here's the resistance. Maybe if it breaks through, you buy at some point. Here's the breakthrough candle. Your buy stop pending order would have gotten in. Okay, it's easy to set up a pending order as a buy stop above the resistance if you saw that there was positive sentiment today. Okay, let's say you missed the breakthrough candle. You see the resistance now. You see it broke through, and you see it trusted the resistance, the old resistance as support now. Support, support. So any of these times it came down to this old resistance level, this new support level, you could buy. And why would you be buying Canadian JPY? Because oil recovered from some of its drop, giving the Canadian some reason to strengthen back up some. And there's positive sentiment in the headlines. Fear and volatility are down. So the yen should, in general, be weakening under those conditions. So to buy on the Canadian JPY made total sense. And there it is, one opportunity, two opportunities, three opportunities off the support level. And the support held each time. Okay. And these bounces up are not small. That's 76.37 up to 76.57. And that's not even the high point. Let's say you missed the high point and you got out right now. That's 20 pips profit just bouncing up off the new support level in the direction of the fundamental news. Okay, and you don't have to risk much. You put your stop loss maybe below the support a distance. So if it tests it a little, you're still in. If it breaks it completely, you get out with a small loss and about twice as much potential profit to where it established a little resistance up here. And if anyone's confused by what I mean by support and resistance, we're talking about areas in the market where first a resistance level is where it had trouble breaking, resistance and down, resistance and down. Once it breaks through like here, it tends to become support. And support is where it has trouble dropping below. It hits and goes up, hits and goes up, predictably right at the old resistance price, give or take, right? You have to have your stop loss with enough distance to account for these wicks, right? The little spikes before the movement. You can't have your stop loss too close unless you want to give up on the movement early, and then you run a greater risk of getting stopped out on your stop loss than it runs the right way. So sometimes it's better to take a smaller trade, have your stop loss a little wider, a little further away, so that this little spike down just below the support doesn't hit your stop loss yet, and you're still in for the profit. You want your stop loss many times a decent distance down below the support, so a little spike like that doesn't hit your stop loss. Okay, and a way to accomplish getting your stop loss far enough away to avoid many of those false spikes before the real run is to just take a little smaller trade, and then you can have your stop loss further away without risking more. Okay, that's one option, not the only option, but it's one option that can help. But in general, this support held very well. One opportunity, two opportunities, three opportunities, just three pending orders to buy from this support level with stop losses below the support. 3 out of 3 would have won, going in the direction of the fundamental news, and each one could have won 15 to 25 pips of profit. Honestly, if you can make 20 pips profit on average per day, that's pretty good. If you could consistently average that amount. So to have nearly 50 or 60 pips profit in one little setup here off the support level, very, very nice return on that setup. Okay. Josie, you're asking, and when do you close? You draw your resistance level. The next resistance level was up here. Okay. And where do you find resistance levels? They're off to the side at the old resistance. And so you could look over here. Let me move this a little bit. You could have said, here's the resistance over here. Resistance, 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 down. And look where this climbed up. This breakthrough candle, if you were in with a buy stop and you got out at the first resistance, look where that was. Right at the first resistance, if you got out, you weren't in to this high point. You got out right here, which is nice. That's about 30 pips profit. Okay. Once this resistance level was established up here, then as this is climbing up, you get out. When you get near that resistance, you get out. And everybody's different. Do you wait till it gets all the way to the resistance? I don't. I get out maybe 75% of the way to the next resistance level. That's where I would get out if I'm scalping, because I don't expect it always to go all the way to the resistance. Sometimes it reverses a bit early, right? So 75%, something like that, towards the next resistance level. If you're scalping, maybe that's a spot that makes sense to get out, okay? In which case, if I draw my line across about 75% of the way up and say, if this is my resistance level, I'm getting out 3/4 of the way up, I would have won on one. This one wouldn't have closed yet, and then it would have gone up and closed here. I would have won 2 out of 2 with the way my system would have worked, okay? Without trying to be too greedy and saying it has to hit the resistance line all the way before I close. You'll miss a lot of profits that way sometimes. And sometimes you'll make more profit that way, right? But I'm okay with 75% of the movement. Others might say 50% of the movement. You know, it's up to each trader. But the next resistance level many times helps you judge where to take your profit when you're bouncing up off a support level. All right? But there are different ways to go about that as well in terms of where you want to take your profit. Some just have a number in mind. Some say, I want to make X pips profit and I'm out no matter what. That's okay too. There are different ways to go about taking profits. You also can do a partial close. If you don't know how to do a partial close, let me show you. Let's say I have, I don't know, a 1-lot position and I'm buying on it. And let's say it was already in profit. It started down here off the support. It got 75% of the way up. And I said, okay, I don't want to close the whole thing, but I want to preserve most of my profit. So no problem. I can right click over the trade, modify or delete, change it from modify to market execution. Now I can say how much of this 1-lot position that I've opened, how much of it do I want to close? So maybe I say, okay, I want to close 3/4 of it, since it's 3/4 of the way towards the next resistance level. So I could say, okay, 0.75, and then don't click sell or buy. You're clicking close. It shows you the order number, and now it says I'm closing 0.75 because that's what I put here. I do that. Okay, fine. I just pocketed 75% of my profit, 75% of the way up between the support and the resistance. And now I'll leave 25% of it and take my profit. I could have it programmed, a take profit in advance, to close the rest of it if it hits the resistance level. Or I could leave it if I think it'll keep running for a much further time, much further distance on the chart. That's up to each trader. But there are different ways to take profit. That's one of them. To do partial closes, sometimes that's nice. And so let's look at some other assets, maybe against the yen. Let's look at GBP JPY maybe. You know, the pound had some bad announcements too. Let's see what it did against the yen. Well, here's the New Zealand. Let's look at that. Okay, New Zealand dollar, 1-hour candles. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. That's pretty much through the day today. Here's the support level. Okay, the new support level. This is where it opened the day, somewhere down here today. And you see it's up. Why did the New Zealand also gain against the yen? Maybe nothing special about the New Zealand dollar. It's positive sentiment. The yen is weakening. Okay. So you easily could have been, and you could be scalping too. You know, I'm showing just trading off of a support level, but if I look at 5-minute candles, look at the opportunity you could have if you know which way the sentiment is going. So look at that classic trade alley, okay? So you might not prefer to sell off the high points if you think, well, the yen should be weak today, so I don't want to sell on the New Zealand JPY. I'd rather buy on the New Zealand JPY. So how many opportunities did you have today? One right here. It goes up. You take your profit as soon as it starts to consolidate and go sideways. Okay, or after X number of pips, whatever your plan is. Okay, it comes down again. As soon as it hits the alleyway, the lower end, buy. It goes up, look at right on cue. It hits the slope and drops. You take your profit. It comes back down. You see this wick came almost here. You take your buy position. Profit, it hits the alleyway at the top, drops back down. It hits the slope. You buy and you're in profit again right now. Now it's slowed down a little, right? Didn't go flying back up this time. So I might take my profit early on this one because it looks like it ran out of steam. Okay, but you see how well this worked, going in the direction of the sentiment with proper entry points, with pairings that make sense. The yen is weak, so pair it against something that doesn't have as much reason to be weak and buy in this example. And you have 1, 2, 3, 4 winners, 4 out of 4. You can't ask for better than that. So unless you're asking for 5 out of 5, right? So let's look at some other examples, maybe some different style of assets. So let's look at Dow Jones. Maybe I have it at the top. Here it is. Okay, Dow Jones. Guess what? Guess what you could have been doing all day on 5-minute candles? Scalping profits. Okay. Why would you be buying on this all day? Because the fear index was down, sentiment was up. You saw green on the board for futures, right? From the beginning almost. And so as soon as you see the uptrend established, how do you know it's an uptrend? Look, resistance level, breakthrough, support, another high point. High points are getting higher, high point, high point, high point, high point, high point are getting higher. Low points, higher, 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 and higher. Okay, that's an uptrend. It's been trending all day like that, or since this morning. So if each time it came down to the bottom of the slope, or each time it broke a resistance level you bought, you would have won many times more than you lost. Yeah, higher highs and higher lows, Julius. Exactly. So very simple process. What's the fundamental news? Positive sentiment. Okay, let me buy on a major indice. So you could have just drawn resistance levels, even if you got in late. Okay, here's the first resistance level. It breaks through, profit. Take your profit once it goes sideways. It comes down, it breaks to a new high point past this resistance. It's like a staircase. New resistance. It goes up, breakthrough, buy from this point with a buy stop even. Could have a pending order up here. It establishes resistance, it drops. Okay, put a buy stop above that resistance. If it breaks through, your pending buy stop buys and away it goes, profit. Okay, it's been climbing like that all day. Yeah, we'll look at gold, no problem. So how do you do a buy stop in this example? How could I have programmed it once I saw this resistance here and I saw the headlines and the positive sentiment? I could have put a buy stop up here, which would have been triggered by this breakthrough candle. And by the way, a breakthrough candle tends to be bigger, more powerful candle than the others, exactly like this one compared to all these candles. Here's a breakthrough candle here, broke through this resistance. Here's a breakthrough candle here. It broke through this resistance here. And so buy stops entering after the resistance is broken is one type of technical strategy. Why would I prepare the buy stop above the resistance instead of a sell stop below the resistance or below the support? Well, because I'm using fundamental news to prefer which direction I want to trade. Today, the volatility index was down, fear was down, the markets were green for quite a while today. So I might say, okay, positive sentiment. If resistance levels break, I want to buy because that means there's still momentum in that direction. So you put a buy stop up here. If it breaks this resistance, it buys, boom, it breaks the resistance and up it goes for the next hours. Okay, 5-minute candles went on for several hours, multiple hours of climbing. So that buy stop here, you could have programmed simply like this. For anyone who doesn't know, change from market execution to pending order. Buy stop buys from a higher point. So you'd put the at price for the price that if it hit, you wanted to buy. And then when it broke through, it would have bought automatically for you and up it went. Okay? You could do the same thing still. Here's the resistance level. So still today, if you feel the momentum is continuing, you put another buy stop above this resistance level. If it breaks through and hits your price, your buy automatically opens. Then you just put your stop loss back below a certain distance and you don't have to risk much. Very simple strategy to trade in the direction of the fundamental news, waiting for confirmation that the momentum is continuing by waiting for a breakthrough to enact, in this case, a buy stop. Now, remember I said you also have to prepare for the unexpected news. Maybe a horrible story comes out and the markets crash, right? It could happen. So while you're setting up, preparing your buy stops with your stop loss back below the broken resistance in that case, you also could prepare down here. If it breaks back below this support level, what do you think has to have happened? If the market all of a sudden reverses and stops climbing like a staircase and starts dropping like a staircase, if this support level gets broken, what kind of news probably came out? If this all of a sudden stops going to higher highs, drops and breaks this support level and hits this price down here, there's probably bad news. What kind of pending order can you prepare for the unexpected news that might break? Right down here, you could put a sell stop pending order that if it breaks that support, you're in, okay? So in this case, you're not trying to guess what's going to happen. You're putting trip lines in the market at strategic locations in case the fundamental news changes. And you put it far enough away below a significant enough price level that if it gets there, it must have been really big news, right? So if this drops to the support and bounces back up, okay, it wasn't that big a news that brought it down. Could just be game playing with day traders. But if it drops to the support, breaks the support and hits your price down here, maybe that's a sign of big news that would work in your favor to sell at that point. Okay, so while you're trading now in the direction in these examples of what you already know, setting buy stops to trigger because of the news you know that already existed through the day today, you could have been profiting with the known news. You also can cover yourself or create opportunities for unknown news that might come by setting pending orders in the opposite direction without having to risk much. Again, it breaks the support, triggers your sell, stop loss back above that support. If it was truly big news, it'll break the support and run. If it was not that big of news, it breaks the support, triggers your sell, goes back up, hits your stop loss, fine. You only lost a little bit. And the potential was unlimited, really, or large potential anyways, for more drop if it was a really big news story. Listen, to keep up with fundamental news, you can sign up for apps on different news websites. Bloomberg, Reuters, investing.com, they all have apps where they'll send you alerts. You also can just check the headlines like we did right before you trade. I like to look right before I trade. I look at all the headlines, all the latest news, then I go on and do my technical analysis. Just to know right now before I trade what's the most recent fundamental news and sentiment. And then I go and I pick my spots with my technical analysis in the direction that makes sense with that news, backing myself up with pending orders in case the news changes. That's it. Very simple type of strategy that I've found and many others have found can work very well. Okay. All right. So someone asked to look at gold. Let's look at gold. And by the way, most all indices, if we look at them, look similar. Okay. There's the FTSE. Doesn't that look exactly like the Dow Jones? It looks like the same chart. It's the FTSE. Okay. DAX looks like the same chart. Okay. They look very similar because they're all reacting to the global news, not to the local economic announcements. Okay. Those bad announcements out of Europe, out of Germany, and out of Great Britain didn't even phase these indices. They kept going because they're paying more attention to the positive news about economies opening up, maybe good drugs being found for treating this virus, etc. Okay. All right. So, and by the way, under normal circumstances, if there is a normal, when there's not a global pandemic, those negative announcements would be moving the market and not ignored typically. Okay. But because there's, bigger fish to fry, so to speak, bigger news than those announcements now, they're not having the effect that they usually would have. And you just have to understand that going into it. Okay, here's gold, and then I think we'll call it quits because we've been going for about 45 minutes. So there's been an interesting effect with gold, and this effect has been flip-flopping a bit, which makes applying fundamental news to the price of gold movement a bit difficult. And let me explain what I'm talking about. Johnny, oil should be available for trading. It's on the platform. I believe it's available. We haven't blocked it or anything. There was a rollover recently, but you can trade. Now, Brent crude has a rollover this weekend. Okay, so everybody be aware. If you have any Brent crude oil positions that you leave open through the weekend, there's a rollover coming to a new futures contract. And what that means, and we'll get to gold here in a second. This is important for me to explain though. What the rollover means is the current futures contract is going to expire soon, so we switch to the next futures contract. All right, our Brent crude and crude oil are traded on futures contracts, and so when we adopt the new futures contract, instead of just closing your positions like many brokers do, and then you'd have to reopen on the new contract, if you leave positions open, we roll the positions into the new contract. And you'll understand that the new contract will have a different price than the old contract in terms of the price of Brent crude. And so if, let's say, for example, you have buy positions on Brent crude, we do the rollover over the weekend and the rollover price is higher, okay? If the rollover price is higher over the weekend and you have buy positions, your open positions will realize a profit on the floating profits that isn't real market movement, right? If the price opens $5 higher per barrel on the chart with the new contract, the market didn't move up $5. You don't get those profits. It's a new contract price. And so any gain you have in equity from a rollover is subtracted as an adjustment from your balance, okay? And so crude oil rolled over last weekend. Brent crude is this weekend. All of the rollover dates are on our website. I'll show you. Okay, so let me again explain about the adjustments with rollover. So if you gain money from the rollover, the amount you gained in equity is subtracted from your balance. So the equity stays the same. You don't gain from the rollover, you don't lose from it. Or the opposite. Let's say you were selling on oil, on crude oil, I mean Brent crude oil. When I say oil, I mean Brent crude at this moment. That's what I'm talking about because that's what rolls over this coming weekend. But this would apply to any asset that has a rollover, okay? Let's say you're buying on Brent crude. The rollover, let's say, is at a lower price. I don't think it will be, but it could be. If the rollover price is lower and you're buying, and your buy positions were already open, we roll over to a new contract. If it had a lower price, well, that hurts your open trades. But again, that's not real market movement. Any negative floating on those open positions, any loss in equity because of the new contract price, if in this example the price was lower and you had buy positions, anything you were down negative because of the rollover, the adjustment is added to your account, to your balance. It's a positive adjustment. And again, in the end, your equity is the same. The equity stays the same from the rollover. So any gains in equity from the rollover are subtracted as an adjustment from your balance. Any losses you have from a rollover on open positions I'm talking about are added to your account as an adjustment. So there's no fee, there's no rollover fee, there's no rollover cost. There are just as many people getting positive adjustments added to their account if the rollover worked against their open positions as there are people having negative adjustments taken out of their balance if the rollover worked for their positions. In the end, everyone's brought back to even. With that said, understand that when the market opens with the new contract, the price could move back towards the old price. It could, or it could keep going the other way. So you have to know that the market will move. Once those adjustments are made, the market will move, okay? All right, so if anyone has questions about rollovers, please let me know. But maybe talk to your account managers as well. And if you're unsure about the rollover and you feel nervous about it and you have open trades on Brent crude, close them if you want. Reopen them after the rollover. That's fine as well. Okay, let's quickly look at gold, and then we'll have to move on. All right, so the gold chart over here, and I was starting to talk about how gold was acting a little, maybe a little funny compared to how it usually acts under what is maybe more normal market conditions. Usually what we see, if there were bad economic numbers, bad reports coming out about the economy, usually gold would go up with bad economic news. Bad news, gold would go up as a safe haven. When good economic news came out, many times then gold would drop. Safe havens tend to weaken when there's good economic news. Well, lately, since this pandemic hit, bad economic news has brought gold down. And good economic news, people started buying into gold again. And the answer to why this relationship has flipped and gold has been going up with good news and down with bad news quite a bit is the news was so scary that people holding gold when there was such bad news and such fear, and we're talking the volatility index normally being around 10 or 11 and it jumped to 70 or 80. Okay, the fear was so high of a complete global meltdown that was the reason people bought gold in the first place, to sell it and have cash during a time of need. So the fear got so high that people were liquidating gold so they could keep their businesses open, pay their mortgages, etc. So gold has sold off during the pandemic for that reason. Even though it's a safe haven, at some point, people cash in the safe haven when the news is so bad that they think there might be a meltdown. Because you can't pay your mortgage or keep your business open with a bar of gold. You actually have to liquidate it sometimes and have cash. Yeah, could have been a number of reasons, Adam, for liquidity coming back, people liquidating their gold. Okay, so but it was strongly related to this pandemic that flipped the normal relationship with fear and gold. So when there's good news right now, when there's good news, like the US announced more support for businesses. Okay, so now people say, all right, I still think there's recession coming, so it's a good time to buy gold. And I don't believe there'll be a total collapse of the whole world economy now, because economies are starting to go up, get back on their feet. There's relatively good news to stabilize the economies at least. So people say, okay, I feel safe getting the liquid cash out of my hands and buying gold again. So with good news, they feel it's safe enough to get the cash out of their hand and buy gold, but they're still buying gold because many investors believe the bigger picture is maybe a recession coming. Not a total collapse, but recession in some areas of the world. Okay, so this is why we've seen this relationship with good news today, positive sentiment. The yen was weakening, but gold was climbing with good news. Interesting relationship. Once you see that that's been the relationship, you could be taking an advantage of this each day, all day long, until the relationship disappears, until you see it flip back. And you'll notice when it flips back. So now, purely speaking, if you're a technical trader, besides the fact it was understood that gold would rise today with the positive sentiment, if you understood the relationship I just explained, and it was easy to trade up on gold today. You see the alleyway, just like the Dow Jones, it followed the Dow Jones up. It followed the DAX up. It followed the CAC up, okay? Followed the major stocks and indices up, which is, again, a a bizarro relationship compared to the normal, but that's what's been identified as the relationship of late, and you could be taking advantage of it. Now, purely technical traders, still, here's the resistance. You still can profit. Even without the fundamental news, look, resistance, resistance, put your buy stop up here. It breaks through, profit. Okay, resistance, resistance. Here's the breakthrough candle of this resistance level, and up it goes, profit. Okay, very simple strategies, technically speaking, at optimal resistance levels and support levels to have a buy stop here on this breakthrough candle, a buy stop here on this breakthrough candle. Okay, now we just had a breakthrough going down. You see it? Whoops. Here's the what should be support now, and we see the reversal. So we see downtrend starting now, breakthrough of support. At some point, you could say if it goes below this support enough, you sell. That's technical strategy. Technical strategy says if it breaks below the support enough, sell stop. Okay? The fundamental news right now says buy back up to this resistance level. Okay? So you could buy off this support level here. Okay? It tested it, but it didn't completely break this area. You could buy, market buy, take profit at the resistance here. That's with the current news as we know it. And if it breaks the support enough, you sell. Okay, you're not guaranteed to win either, but with both, you can have a small risk with a larger potential profit. Right now, buying with the fundamental news because good news has been causing gold to go up lately. And there's good news today in terms of the sentiment anyways. And so this could likely run back up to the resistance. And if it breaks your support level down here, you sell. Okay. And again, I'm putting the support level to where you see these wicks. You see the wicks here? This wick, it didn't break that support level. If it goes below those wicks, now maybe your sell stop kicks in. Otherwise, look at this climb off the support. Look at it go. Hopefully some of you are in on that if you're scalping. You could already take a profit. So it's bouncing off this support right where these wicks established support, there it goes up. Okay? And depending how quick you take profits, you could already be out or you're waiting for it to go all the way to the resistance or halfway up, whatever your strategy is on that. Okay, everybody, I think we'll stop there. Any last questions before? Oh, I wanted to show you where the rollovers are found. Go to our website, trading info, right there, CFD Rollover. Here's the rollover dates for everything. You see Brent crude, 26th of April. That's this coming Sunday, in a couple days, this weekend. It shows the next rollover date here. Okay? Current rollover, the next contract that's being accepted expires in these months over here. The contract that's being adopted expires in these months. The exact date will be posted over here in this column once this one expires. Okay? So we're going to be moving to June contract. Okay, so any questions, let me know through your account managers maybe, or come back to the webinar on Monday and we'll have a look at things, okay? All right, bye everybody. Thank you for joining.